Hi, my name is Christian Waldegrave, market analyst at Teekay, and I'm here at the Jefferies 2012 Global Shipping Conference in New York. And I'm going to give an update on the conventional tanker market for August 2012. And what we've seen in the last couple of months is that those stronger rates in the large crude sectors that we saw through the first half of the year have come off, and we're now well into the Q3 summer doldrums. And it's usual for this time of the year for tanker rates to come off for seasonal factors, but that's been exacerbated in the last couple of months as well by a couple of things. One, in the first half of the year we saw a lot of oil demand and transportation demand for stockpiling, especially in Asia and in China, and that was both as a hedge against potential Iranian supply disruptions, but also just for strategic stockpiling purposes. That demand for stockpiling has now started to drop away, and we've also seen a weakening in the global economy as well in the last couple of months. We've seen more signs that Europe is moving into recession and some slowing down of the US and the Chinese economy as well. And that's all feeding into the already oversupplied shipping market and the seasonally low Q3 market to produce some very low shipping rates, especially in the large crude tanker sectors. So in the VLCC market, we've seen rates at or well below OPEX I should say. And in the Suezmax sector as well, we've seen rates come off. And in the Aframax too. But now, as we look towards Q4, we think that rates will start to recover a little bit because of those seasonal factors that always come in during the winter months. So that includes things like heating oil demand in the Northern Hemisphere, and also transit delays due to bad weather, like fog in the Bosphorus, or weather delays in the Gulf of Mexico. So we do expect that the rates will bottom out in the next month or two, and then we'll see some higher rates going into Q4 and into Q1 of 2013. Looking ahead to 2013, our view on the demand side has weakened slightly, and that's, as I said, due to recent signs in the global economy that there's a bit of a slowdown going on there. And so now our outlook for 2013 is that supply and demand will probably come out around the same, at about 4% demand growth and about 4% supply growth. So that means we'll see a continuation of these types of markets into 2013. However, as we get further into 2013, the one thing that does improve is the shipping supply picture. Over the last 18 months to 2 years, there haven't been very many orders placed for conventional tankers. And so the fleet growth really starts to slow down as we move into 2013, particularly in the Aframax and LR2 sectors, where in 2013 we might see zero or even negative fleet growth. And it's that lower levels of fleet growth which is going to set us up for a recovery, a bottoming out of the market, and an eventual recovery in the second half of the year and getting stronger into 2014. So that's our update on the conventional tanker market, and join us again next month.